Look, Trump's a New York guy. Bessent's in that world. Lutnick's in that world. They're going to have a lot of people in their ear saying basically make the American people scream, don't hurt the treasury market's real value. And the reality is like, unless they want the worst crisis they've ever seen, that's what they have to do. Crush the real value of treasuries, or you will not be able to do all these things you say you want to do politically and economically.
Hey everyone, welcome back to the show. Luke Gromen here, founder of FFTT. Thanks so much for returning to Coin Stories.
Thanks for having me back on, Natalie. It's great to be here again.
Lots to talk about because there's lots of uncertainty. I really want to start with Doge because regardless of where you stand politically, I think it's hard to argue against removing government waste and fraud, right? But this has become very polarized, and a lot of people are concerned that it actually won't make a dent in all of our debt. And that's where I want to start with you. You've been warning that pushing austerity through things like Doge too hard could actually create more problems with our debt, especially on the fiscal side. So for people hearing that for maybe the first time, can you explain why tightening our belts could actually trigger a sudden stop in the economy?
Yeah, absolutely. Ultimately, it comes down to the things in our economy that are interest expense and interest like. And right now, our gross interest plus the pay-as-you-go portion of entitlements plus Veterans Affairs, they are about 108, 110% of our receipts. In other words, we are not covering with our receipts. And oh, by the way, trailing 12-month receipts in the United States are at all-time highs. They're higher than they ever were post-COVID. So we can't make the effective interest payment on our debt and debt-like obligations without printing the money, is where we stand today. When you're in a situation like that, this is really a restructuring situation. When you're in a restructuring situation like that, it's important to get the order of operations right. The order of operations in such a situation is, A, you go to your banks and you say, let's renegotiate. We can term out debt. We can reduce coupon. I can give you a stake of the equity. Somehow you have to get the interest expense down dramatically. Then you can go to your different business lines and say, okay, I'm losing money on this batch of customers. This division is a money loser. I have fraud in this business division. Let's cut this stuff. And that, from that base, after you've restructured your debt so that you are not literally unable to make the interest payments, you actually can then restructure the business and move and improve profitability, improve efficiency, all these things that Doge is trying to do. And if we take this to the U.S. and the Doge situation, and I'm sure there will be people cringing saying, well, the U.S. is not a business. They can print their own money. And ultimately, exactly, that's my point. Yes, they can print money. But if we carry this forward to the U.S. just to talk through why it will trigger a crisis with certainty if they do the wrong order, after which they will print lots and lots and lots of money, it's the same kind of dynamic. We have true interest expense that is over 100% of receipts. In that situation, in the real world, in the private world, you don't cut fraud, waste, abuse. Every dollar that comes in the door of revenue, whether it is money losing or not, it doesn't matter. You don't cut that. You have to, because you need every dollar there to be paying your debt. And so if you cut those dollars of revenue, all you're going to do is make it harder to pay your interest and interest-like obligations, push you closer to default or to printing, as the case is. And you're going to knock stock market down and business down because the U.S. government, whether it's fraud or not, it doesn't really matter. It's revenue. And their outlays are 25% of the economy, of GDP. And when you have a highly levered economy, you knock down 2 points of GDP. By the time end users do it, they are going to, there's going to be a leverage effect, a money multiplier effect, if only from the leverage, if not from the economy, turning the money over with. So there probably would be a notable multiplier effect. And in addition, we in markets, we want everything, this month, 3 months, 6 months. If we're really thinking long term in markets, we're thinking 9 to 12 months. And the reality is a lot of what is being discussed as it relates to Doge, et cetera, impacts the real economy, the non-Wall Street, the non-investment management real economy. And in that world, long term is 10, 20, 30 years. And when you're talking about potentially cutting a quarter of the economy down drastically, government outlays, uh, and you're talking about changing the structure of trade and the system, all of which I think are the right things to do in the long run. I think it'll be great for America in the long run if we survive the experience. Uh, the problem is that these people have to make an ROIC calculation, an internal rate of return calculation. Should I invest in a property, plant, and equipment in America on a 20-year scale, 30-year depreciate, whatever? Okay, what are my inputs? Well, is the tariff 10 or is it 20 or is it nothing? Or how can I put a plant in America if the federal government's going to slash spending to what's 20% of my customer base because they deem what is fraud and abuse? You know what? Screw it. I'm just going to sit on my hands and wait. And that's what we're starting to see happening. All this soft data that we're seeing collapse. This is just corporate execs going, I can't plan a real business around this, so I'm going to wait. And that's why I say, to tie it back to the initial Doge, is you've got this very potentially toxic. I mean, I've been repeatedly harping on and using this. It's a crude metaphor of giving yourself a root canal with a shotgun. Is if you try to Doge before you restructure with your creditors, before you devalue debt to GDP, yeah, you'll cut spending, you'll cut fraud, waste, and abuse, in the same way that you'll get rid of that root canal by sticking a shotgun in your mouth and pulling the trigger. Like but it's effective, but it's fatal. And that's where we are. And so they need to sort of meet with the creditors and get debt to GDP down drastically. And there's a number of different ways you can do it. Ultimately, it requires a significant period of real negative real interest rates. And if they do that first, then yeah, absolutely, you'll be able to sort of whack away at fraud, abuse, waste, etc. And yes, it will hurt certain areas. Yes, we might even have a recession, but it isn't going to be fatal to the economy. We will, if you don't devalue the debt to GDP first drastically, quickly, because we're on the clock now, you do run this risk of a sudden stop. And sudden stop in the U.S. would look like S&P down 20% in a month. And it would look like in that, initially 10-year treasury yields would go down for the first little part of that. People say, oh, see, it's going to work. And then 10-year yields would start going up. And by the end of the month, they'd be up 10 or 20 basis points. And the dollar would probably be down on that, and gold would be surging. And I think at some point, Bitcoin will stop trading with NASDAQ and start surging as well in that scenario. I don't know if it would happen as fast, but that's what we're looking at. And then what in that scenario? What do you do? Do you have the Fed come in and print money? Do you have what do you do? So they better get this right. And so far, they're not.
Coin Stories is brought to you by Genius Group, a Bitcoin treasury company listed on the NYSE under ticker GNS. Genius is on its way to hodling 1,000 Bitcoin in its treasury while educating the world on a Bitcoin-first future. Genius is launching the Bitcoin Academy with courses from Saifedean Ammous, author of the Bitcoin Standard. Join the launch waitlist via the QR code on the screen or the link in my show notes and receive the weekly Bitcoin Treasury newsletter. Plus, get a chance to win a whale pass to Bitcoin 2025 in Vegas. Genius isn't measured in IQ, it's measured in BTC. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. Bitdeer trades under the stock ticker BTDR and boasts a massive 2.5 gigawatts of electrical capacity across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Learn more at bitdeer.com. Don't forget to join me in BTC Vegas this May and attend the 4th annual Women of Bitcoin Brunch. Use code HODL for 10% off your pass. Well, I want to put a spotlight on something you said because I think that's what the average person doesn't get. They're for Doge. Oh, cutting government spending, that's great. But to your point, government spending is making up a huge portion of the economy. And so if you crash that, all of a sudden our GDP crashes, risk on assets crash, then tax receipts crash, and then we're getting into that debt spiral that you always talk about. So actually, what is the solution? The US is cornered, and you're saying we have to devalue our debt. But how do we do that? Because there has been talk of, can we revalue the gold? I just had an interview with Senator Cynthia Lummis. That's something she's proposing in the Bitcoin Act, that we revalue the gold certificates, not even the physical gold, just the gold certificates. But then I hear Scott Bessent saying that's not going to happen. So how do we work our way out of this?
Yeah, I think ultimately, like I said, there's a number of different ways. So let's start with sort of the most plain vanilla is you're going to need some version of Fed yield curve control / QE, either by the Fed or via Fed proxy, right? So when you hear Scott Bessent in that same article, in that same release, talk about repealing the SLR exemptions or the SLR regulations, excuse me, for banks holding treasuries again. What he's saying is I'm going to try to get back to where we were in 2020, where the banks were doing QE alongside the Fed. It just wasn't called additional Fed QE, but that's de facto what it would be. And look, he's sophisticated. He's spinning it as it's deregulation. And who's not in favor of deregulation? Well, nobody in his political party, right? If he came out and said, well, we're just going to do more QE through the banks like we were 2020 and 2021, the reaction from his party might be a little different. But that's what it could be. Last week, you saw this floated out, this proposal on Bloomberg discussed. It was a Brookings white paper with a former or current Fed governor or advisor, former Fed governor, current, I think, Fed advisor, at any rate, plus a couple other folks, where they're talking about backstopping or bailing out the hedge fund relative value trade. Mm-hmm. Well, the hedge fund relative value trade has been one of the biggest marginal buyers of treasuries over the last 3-4 years. And again, as we wrote for clients last week, in the end, I don't have an opinion on whether that's, the political opinion of that. I'm just looking at it straight from the math of like, okay, that would be, we want to get back to reprivatizing markets. We keep hearing that. We hear it from Secretary Bessent. We hear it from, everyone on that side of the aisle. Well, if you want to reprivatize markets, then you have to be willing to let treasury markets dysfunction, treasury market auctions fail, and rates, let the free market set rates. The problem is given everything we started this podcast with, the free market setting rates for treasury would set them at a level that would bankrupt the entire U.S. economy, the government, everybody. And that is not really hyperbolic. We saw it with the repo rate spike in 2019. Repo went to 8 to 10%. There you go. Private market rates are setting a rate for the U.S. government, 8 to 10%. Mortgages, 12. This country is a smoking crater financially after that.
Yeah.
There you go. We've reprivatized. So you see these things floated, discussed, whether it's SLR exemptions, whether it's bailing out the hedge fund relative value trade starting to be discussed, whether it's what have you. And then, the last one you mentioned was Senator Lummis with the revaluing gold or revaluing gold certificates. Look, they could create now with gold, this morning as we sit here, 3150. You're probably close to $850 billion that would get deposited directly into the TGA, with which Bessent could do whatever he wants within some constraints. I suppose, which is an oxymoron, but he could certainly buy back debt. It reduces duration issuance by $850 billion. So paradoxically, for a long time, people said, if the U.S. revalued gold, treasury yields would spike. No, they wouldn't. They'd collapse. You want to get the 10-year treasury yield down? Talk up gold, right? Walk gold up. You're not going to need to issue any debt. And if you don't have to issue any debt, every year there's 400 to, I don't know, this is a guesstimate. Every year there's probably 400 to 500, maybe $600 billion of just mindless duration buying in treasuries. They have to buy, and it's pensions and insurers, right? So they're going to buy 400 to 600 billion, and maybe it's 300, maybe it's 7. I don't know, but it's a decent chunk of money. And the point is that if you get duration issuance plus foreign selling of duration below that number, treasury yields are going to fall almost regardless of what's happening with inflation and all this other crap. So, uh, yeah, you could revalue gold. You could walk you could, or the gold certificates, and you could significantly reduce treasury issuance, get yields down. That can work in this way. That just buys you time, though. That buys you a year or two. That doesn't fix the problem. You would have to revise gold a lot higher or be out in the market as the U.S. government bidding gold, which might be, if I was sitting in his seat, is what I would do, is I would just use the exchange stabilization fund to goose gold to $5,000 or $6,000 or $7,000 and then write it up. And that would buy me even more time. But that's neither here nor there.
Well, so what's the other side of that? Why wouldn't they be doing this? And do you think it's likely that he could revalue gold at least to current market levels?
I think it's very likely he could do it to at least current levels because they're quickly, because they haven't followed the order of operations, they're running out of room. I think we are I think we're, I've said 3 to 5 months to a very severe crisis. And I would take, every day that passes, every day we have Trump come out and say, like yesterday morning, it wasn't even lunchtime, and I've got sanctions on Russian oil, and I've got, maybe I'll sanction everybody, tariff everyone. That's just going to get everyone to sit on their hands more. So I would take the under on that 3 to 5 months. So I do think he will do that eventually. Why wouldn't he do it? Look, if the plan is to basically fly the plane into the ground at 500 miles an hour in order to create a crisis so severe that they have wide berth to political cover to sort of restructure the system as they see fit. If they think that's a good thing to do, and they think politically they can survive that experience, then don't do anything. Just keep doing what you're doing, because that's what we're going to do. And then once the plane, smashes into the ground and, people are begging for salvation, then you've got a lot more leeway. I just have a hard time believing that's the case. So that's sort of like, pushback one is like, oh, they want this to crash. I'm like, you really understand what you're asking for? And because again, politically, like if they do that and then they bail out too big to fail banks, they're done politically. They're done. It is over. They will get crushed in the midterms. The other pushback, the other reason they haven't yet, some of it could just be as simple as like, it takes time. They're figuring this out. I think all else equal, this is the last thing they'd like to do. And so they wanted to maybe try some other things first, which are obviously not working now. And when I say obviously not working, it's 10-year treasury yields are flat. The S&P's down 8%. Like that's not how it was supposed to go. Flat. 10-year treasury yields are flat over the last 6 weeks, 5 weeks. That's not how it was supposed to go. So it's not working. It's not going to work. And then I think the last is, some of it's political. Like, look, Trump's a New York guy. Bessent's in that world. Lutnick's in that world. They're going to have a lot of people in their ear saying, basically, make the American people scream, don't hurt the treasury market's real value. And the reality is like, unless they want the worst crisis they've ever seen, after which they're going to get bailed out and destroy themselves politically by doing so. Yeah, that's what they have to do. We're really, the MAGA reshoring, all this stuff. It's a simple choice: crush the real value of treasuries, or you will not be able to do all these things you say you want to do politically and economically.
Well, you've pointed out that the Fed really hasn't offloaded any 10-year treasuries on net since like 2010. So obviously anyone would be skeptical that the Treasury could actually sell them without spiking yields. So why is Wall Street ignoring this? Why is Wall Street on the opposite side of this consensus? They're getting whispers from the government?
No, because look, Wall Street's a little famous for this, right? Like you give them a narrative and you really push it and they will you give them something to sell and they can sell it. Right. And so, our guy, hedge fund manager, is running treasury. It's a markets person, free markets. Here we go. It's not this labor economist who's never had a job in the private economy, and who is you know University of California, Berkeley, blah blah. Right. So we've got this. Speaking, of course, of Yellen.
Mhm.
So I think a lot of it is just like it's Besant versus Yellen, and like the math doesn't care. The math is the math.
Mhm.
The problem is the problem. And oh, by the way, Yellen bailed them out with in
Yeah.
the right. So like was I think that's really it. Is this case of they believe it, right? You give them the narrative and you push it, and they believe it. I could point to a whole number of things, right, over the last 10 years where it's like, hey, you know, I'm not going to say the word because then you'll get, restricted on YouTube. But if you only need one of these things, and one of these things turned into 6 of these things and 8 of these things and every 3 months
Mhm.
of these things. And,
Mhm.
hey, I mean, I got lambasted in 2022 and I didn't say I'm rooting for Russia. I said Russia has a lot more leverage in this whole situation than the common narrative says. I was right. They were wrong. We're
Mhm.
seeing that. Russia won. I mean, and now you're hearing it from NATO. NATO, the head of NATO, 2 months ago said we got outproduced by the Russians 4-1. Russia's winning, full stop. And so I think it's one of these kind of situations where it's like the narrative is, hey, it's them and it's different, and so they're going to be able to figure it out. And the reality is the math: 108%, True Inch is 108% of receipts, and you're doing everything you can to get receipts to fall via getting stocks down and getting executives to sit on their hand as it relates to capital spending decisions and hiring decisions. Math doesn't care. Math is math.
Help me understand something. Let's go back to the idea of reprivatizing the economy because you say it's the right thing to do, but the order of operations really, really matters. The thing I don't understand is we are the global reserve currency. We have to run structural trade deficits. You can, yell about tariffs, you can incentivize these companies to bring the labor back here, but I don't think it can last long because we can't pay workers as much as they would need to in order to sustain our position. We have to offload these dollars. We have to export the inflation. And so we've moved industrialization overseas. So I just, can you help me understand that? Because it seems like they're talking about something that is impossible.
It is impossible until you consider what I think is the elephant in the room and what they can't say, because they would scare the crap out of the bond market. And then they would have to buy the entire bond market with printed dollars in a compressed period of time, which is all of those things are true until we settle our deficits in a neutral reserve asset that floats in all currencies. Settle in gold. Take steps to encourage everybody. Stop stockpiling treasuries, number one, which we have
Mm-hmm.
started doing as of 3 years ago with sanctioning Russian FX reserves, more recently with threatening sanctions on Colombia for not taking 2 plane loads of people back. You can read in Stephen Myron's piece these different user charges on treasuries. If you buy treasuries as a foreigner, we may charge you a user fee. We may increase the tax rate on your holdings of those treasuries. Lots of different things. They're all pointed in one direction that most of Wall Street's not paying attention to, which is making the cost of carry on treasuries relative to gold and conceivably Bitcoin. But for the moment, gold, because we can see that that's where primarily or sovereigns have switched to in terms of not treasuries, uh, making the cost of carry on this paper higher. And so if we run a deficit as the United States, as we have forever, if that money is then recycled back into our treasuries, back into our NASDAQ, et cetera, uh, the dollar stays strong. The top 1% in this country and Washington, D.C. get richer and richer and richer. And the industrial base of the economy gets hollowed out and hollowed out and hollowed out and poorer and poorer and poorer on a real basis, which is precisely what we've seen.
Mm-hmm.
Once you force the world to net settle in gold or Bitcoin, it can be Bitcoin. Practically speaking, thus far, it's gold.
Mm-hmm.
Uh, then the deficits we run are immediately reflected in the dollar, because gold gets bid much higher, faster in dollar terms than it does in, say, yuan terms. And so through the gold pivot, and I'm going to say gold, it could be Bitcoin, but like I said, for practically speaking, it's gold for right now. If gold goes up 80% in dollar terms, because we're still running these big deficits with the Chinese, and the Chinese are mostly getting dollars, and dollars for everything is non in America. And they're turning around and they're no longer buying treasuries, and they're no longer buying the NASDAQ, which, oh, by the way, they have bought trillions in NASDAQ, and they're no longer buying farms in Missouri, and they're no longer, for a number of different reasons, then they're going to buy gold. And as they buy gold, the price of gold is going to go up because, for example, people highlighted, well, China ran the biggest trade surplus, not only in China's history last year, but in world history, is a percent of GDP. And what I pointed out about a month and a half ago when that data came out is China also imported 1,384 tons of gold last year, according to their customs, non-monetary gold. At $22,000 per ounce of that gold, China ran a balanced trade position. What happens to the dollar is, so you can see this being set up. The Trump administration, to me, it's very clear what they're doing. Stop recycling your dollars into our capital markets. Listen to what Bessent said. Wall Street is not hearing him, and I think he's doing that on purpose. We want Main Street to do really well. Wall Street has done really well. They'll still be okay, but we want Main Street to do really well. How do you do that? You let our deficits crush the dollar via gold by making it hard, if not impossible, but certainly have higher cost of carry for your trade creditors to recycle into the NASDAQ. And so it's, for example, super interesting to me. I've written about it. I've been writing about it for 3-4 months, as you know. The biggest Belt and Road hub in the world is the NASDAQ 100. I mean, this is like the stupidest trade in the history of the world from a trade and economic perspective. So the 1% of America does great. The government, federal government, does great. And the rest of America gets crushed, and the country gets crushed, which is we run these deficits, we offshore these jobs. China, they run surpluses against us. We send them dollars. They buy treasuries. Okay, well, at least we can sort of get some of our money back when we, inflate away treasuries. Well, they stopped buying treasuries 10, 15 years ago. What are they buying since? They own trillions and trillions of NASDAQ. So we are literally selling control of our most valuable companies, IP, et cetera, equity and equity stakes. That's what this is, to the Chinese in return for Chinese-made goods, so that the top 1% in Washington can get richer and richer. Like, that's a stupid, stupid trade. And the military is what has finally put a stop to this, which is like, guys, we just lost in Russia because we can't make anything without the Chinese because of this deal. So that's where I think a lot of the sort of discussion that I see still publicly was, well, someone has to run the deficits. No, they don't. Gold is going to run the deficits. And so when you see what we're seeing in gold, I don't think people saying, oh, gold's due for a pull. Who knows? I don't know if it's due for a pullback or not. I don't think they understand what they're watching. Gold's going through a phase change. Gold is going to run the deficits. And I think before long, Bitcoin's going to start to run the deficits. And as that happens, you're going to see gold up big, Bitcoin up big, dollar down against the yuan in particular, big. The Chinese are going to have to consume more of their own production, which, oh, by the way, their dollar and yuan purchasing power of gold and Bitcoin will be going up. They can do that in that case. And we will have a rebalancing mechanism. And, we can't compete. We can't compete because of the dollar, and on global markets. This will now. That's the thing I think Bessent doesn't want to say, which is like, this is wildly inflationary, wildly. And that's in the cake. Like we can have wildly inflationary outcome and be dependent on the Chinese for everything as we sort of print money to kind of keep this deal going over and over and over and end up with no industrial base. Or we can have it wildly inflationary now and end up with a defense industrial base and a more balanced economy, a middle class, a working class, more politically stable society. And I think the Trump administration is pushing us in that direction.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. If you use Bitcoin, you need a wallet that's fast, simple, and packed with features. That's why I love Speed Wallet. Send and receive Bitcoin or swap Bitcoin and stablecoins instantly. Shop gift cards, play games to earn Bitcoin, and explore mini apps. Download Speed via the QR code on the screen or the link in my show notes and use referral code CoinStories10 for 5,000 free sats. Next up, the Bitcoin way. Bitcoin is only freedom money if you control it fully. The Bitcoin Way can help you learn the skills to properly secure your Bitcoin in 100% self-custody with zero counterparty risk. Go to thebitcoinway.com/Natalie to speak one-on-one with the best experts. Your security and sovereignty are priceless, so don't gamble with your future and peace of mind. And finally, CoinKite, the one-stop shop for all your Bitcoin cold storage needs. Their flagship cold card wallet is my go-to for cold storage because it's ultra secure, open source, and beginner friendly. Just watch my tutorial. Protect your Bitcoin like a pro. Visit their site, grab 5% off with promo code CoinStories. So if we lose the status of global reserve asset via US Treasuries and we move to something like gold or eventually Bitcoin, can we still be the global reserve currency, or why would that even be necessary?
It's a great question. I think it would still be, I think it would still be the global reserve currency, and we would continue to trumpet it as such in the same way that it was, call it 1946 to 71, before we closed the gold window, right? It wasn't really the dollar. It was the gold-backed dollar.
Hmm.
And knowing our government, any government, we're going to continue to say, hey, we're still the global reserve currency. Gold's going to be the global reserve currency, or eventually Bitcoin, perhaps. Or that'll be the asset backing the dollar.
Yeah.
And you can see it in sort of the breakdown you'll see of the two sides of sort of de-dollarization. The one side says, oh, look, dollar's still used in 90% of global transactions. It probably still will be. So what?
Mm-hmm.
And then you look at share of global FX reserves, and the dollar's share just of other currencies has gone from 70 to 58% over the last 20 years. If you include gold in that now, as gold prices rise, it's probably gone from 70% to 45%. And if gold, if, it's an if, I have to say if, but I think it's a when, as if gold continues to run the deficits, become the neutral reserve asset, the dollar share of global reserves is going to continue to fall. And the biggest share of global reserves will be gold again,
Yeah.
which was, oh, by the way it was like sort of forever, other than like the last 30, 40 years. So that's how I think it will play out. But, we're going to have to see.
Okay, so going back to Wall Street, basically they're sort of in a bargaining stage. They recognize issues, but they're not recommending dumping the treasuries for gold or for Bitcoin. What do you think will change that and have them actually recognize this big shift?
I don't think I think by the time they do it, they will be, it'll be like '08, right? Like it was so obvious what was happening by, call it '06,
Yeah.
'07, and the
Denial, denial,
severity of it.
denial.
Yeah.
Yeah.
And then by the time, like, it was all like, oh, this is a problem. I mean, that's just the nature, that's the nature of political organizations. That's the nature of banks, which are highly political organizations. Uh, I don't think the average person understands, if you're not in that world, the career risk to you working at a big Wall Street bank, saying some of the things I say. You just
Mm.
don't get to do it. And part of the reason why I wanted to be independent, why I took no outside investors when I started, as frightening as that was.
Wow.
Um, so I, I do think there will come a time where they will say the opposite of what I was told. I guess it was a year ago, year and a half ago. Might have been a year and a half ago. Anyway, I was told, I gave a presentation, and someone came up to me after and said, "Hey, that was great." And the only problem with what you're saying, and it was basically like, look, like treasuries would be fine, but basically gold has been outperforming treasuries, going to continue to outperform treasuries dramatically. And this person at this, sort of a investment conference said, the problem is like if I buy gold and it goes down 30%, I get fired. And if I buy treasuries and they go down 30%, I keep my job.
Mm.
And this was after long-term treasuries had already fallen 40%, by the way, when this person said this to me. So I think at the end of all of this, you'll get some version of the opposite of that, which is, like you kind of got in the late 70s, early 80s. Hey, treasuries are certificates of confiscation. You're going to lose it. And, nobody paying attention to the fact that gold was 130% of foreign held debt at that point, of foreign held U.S. debt at that point. So like we literally had our debt was 130% backed by gold. Like, all right, well, I'll take a flyer on the debt at that point, right? Especially 15% rates. So I think you'll get to a point where they won't say, oh, dump your treasuries, but it'll be, hey, they will get much more vocal about, hedging it with gold or hedging it with Bitcoin or if the government won't create gold bonds like Judy Shelton or bit bonds like some of our friends and colleagues
Brian
have
Estes,
been
yeah.
talking about, create your own synthetic gold bonds or bit bonds, right? Where instead of being 100% duration in treasuries, you're 90% duration in treasuries and 10% Bitcoin or something like that. And who knows, maybe we'll even see products like that. If/when we see products like that, that will be like the first time where I would probably start to go, okay, where are we in the cycle? Where are we? Where's the price of gold? Where's the price of Bitcoin? My guess is you're not going to see it until gold and Bitcoin are still way, way higher than here. But once you start to hear those types of things, those will be your signs, I think. They'll be more subtle than just, hey, treasuries are dead, get out, that kind of a thing. It'll be something like that in an allocation basis or something.
So near term, you're pretty bearish on Bitcoin. It's been closely tracking with these tech stocks. So what do you think will finally make Bitcoin break away from that correlation with the Nasdaq? And I'm assuming you think negative real rates is going to help drive that.
You know, I think negative real rates will help tech and Bitcoin marginally, but I think it really is around this dynamic that I still don't get the sense that people, the investors really appreciate, which is America is basically flat out telling not just China, but China's the biggest. Take your money and go home. We don't want it here anymore. You want to build a factory here, great. But if you just
Right.
want to come here to buy stocks and dump money here, we don't want to be your laundromat anymore.
That's the America
And
First order, right?
exactly, yeah. There's so for listeners that haven't seen it, or there was on late Friday night, February 21st, the Trump administration released the America First investment policy memo, and it's like 10 pages. You can read it, but it's basically China, take your money and go home. We don't want it
Yeah.
here anymore,
Hmm.
and that I think will ultimately be a catalyst to the separation of gold or excuse me, of Bitcoin and Nasdaq.
Hmm.
And that is, I think, starting to drive Nasdaq down. It has a long way to go because multiples are high. And in the short run, traders control the flows, and you can, call up your screen. Short term, Nasdaq down, trade Bitcoin is levered Nasdaq. I get it. It's high beta Nasdaq in the short run. Now, if you like back up 5-year, 10-year chart, you can see very clearly these periods where Bitcoin has massively outperformed Nasdaq, massively.
Hmm.
Uh, but they still tend to go directionally similarly. When Bitcoin's up, Nasdaq's up, and vice versa. Just Bitcoin rises more and pulls back less in the or drawdown after drawdown, full cycle. It ends up from a higher starting point. Is probably the best way to say that. The America First investment policy memo, I think, will start to break that correlation, because I think right now in the short run that correlation is holding. At some point, I think capital flow is going to see Bitcoin for what it is, which is a neutral reserve asset linked to energy, uncontrollable by any government. And I think it'll start siphoning some flows off from NASDAQ as, America continues to say, listen, you want to invest in factories here? Great. Otherwise, get out. And that's a lot of capital that's got to get out. And, we're seeing the gold benefit already. I think what we're seeing in gold is a precursor to what we'll see in Bitcoin. Gold is going up despite real rates, over the last couple of years. That's the kind of divergence I think we'll see as a result of these flows in what the Trump administration is attempting to achieve.
Yeah, I agree with you. It's a good time to stack. All right, as we start to wrap up, we're in this airplane in a steep nosedive, as you've written. We need to lighten the load. We need to devalue the debt. So, if you were in charge, if you were either in the White House or you're in charge of the Fed, I mean, what are like the first three things you would do immediately? What needs to be done so that we can bring this plane up?
I would call a conference on a Thursday night, maybe a Friday night. I would set everybody down and said on Sunday night, we're leaving and we're going to announce this. And what this is a comprehensive plan of where we want to be in 2 years, 3 years. And that includes significantly devaluing the debt in a very short period of time. And then figure out exactly how to do that. There's a lot of ways you can do that, but it has to be done fast, has to be aggressive. We are simultaneously going to get on message again. The Fed is going to help us with this for the next 2 years in order to maintain bond market stability. 3, we are going to message to the American people. This is what we need to do. This is what political leadership should be doing. We stand up and say, listen, we're doing this, and here's why. We can't make things anymore. It's hurt the middle working class, blah, blah. We are going to have a 2-year period of elevated inflation. But it is going to be inflation primarily where the wages of the middle and working class in particular outperform other. They are keeping you close on your cost of living as it relates to commodities, and because the Fed is stepping in to help us, they're capping yields for mortgages at whatever. So you're going to get basically a, you're going to get a debt jubilee on your house if you own a house. Now, of course, say, okay, well, what does that mean? Home prices surge for new people.
Great.
That you can quickly get into. The last thing I would say is that before I finish, the third thing I would say is we're going to launch a comprehensive trade skills program. Basically, we are reshoring. We need 5 million welders by 2028. We have this many. And the first X that go in are going to get guaranteed free tuition and a paycheck of this, go. And so now, and subsidized housing, who knows, whatever. That's the kind of thing I think has to happen, right? You're going to have bondholders lose big time on a real basis. And people say, well, that's not fair. It's communism, social. Look, I can't remember how many times I've heard we're in a war. This is a new war, whether it was COVID, whether it's new Cold War, where there's all these, everybody wants a Cold War, wants to win the Cold War. Everyone wants to compare it to this great competition. And nobody wants to remember that during the great competition, we had capital controls last time. Mm-hmm. We had low debt to GDP because at the end of World War II, we had negative real rates of negative 13% at the lows. Debt to GDP went from 110 to 55% on their way to 30 because we repressed bondholders for 30 years. It's like, you can't have your cake and eat it too. So it would have to be this type of not just financial, but comprehensive announcement with a very distinct defined time horizon, because you can't, I think it's too dangerous to have the Fed out there on an open-ended, hey, they're just going to buy the debt until the currency collapses. There's got to be some sort of, some sort of dynamic. And there's sort of different ways you could do that. I mean, look, like you said, we could revalue the gold. We could buy down the debt. We could, do the bit bonds thing where you're issuing a little bit of that and get the borrowing rate really low. Look, that's just a different way of saying Bitcoin goes to the moon and, the dollar collapses against Bitcoin. And, so it's really a lot of different flavors of a lot of different things, or methods to get to the same outcome, which is the real value of the debt must be collapsed in a compressed period of time, and bondholders and banks must be financially repressed severely on their bond holdings, and we must reinvest and provide some sort of visibility to both how we're going to invest, the jobs, the comfort to companies. Hey, this is going to last 2, 3, 4 years. This is a permanent change. Okay, now I'll make a change. Now I will definitely invest in the plant. Because we get another 12 months from now, they're going to start going, Trump's going to be out of here in 2 years. Mm-hmm. And if they have a bad midterms, they don't have to do anything. They just have to sit and wait. So it would have to be sort of a quick, forceful, holistic, with a finite term type of program. I hope they're doing that. I'm not encouraged that they are.
Well, Luke, you're pointing to the harsh reality that there's really no easy way out. And if you're not holding on to hard, scarce assets, you're going to be debased. You're going to be crying out for handouts. I really worry about that portion of the population. Majority of people, they're not in these stocks that Wall Street has benefited from for a very long time. Their whole savings is essentially in their house. I worry about where we're going. And I think that the people that have been so happy that they got their elected official in and they have Trump in, I think they're going to be a little disappointed. I don't know, but there's just no easy way out of this debt crisis that we're in. And the gold holders, the Bitcoin holders will be the beneficiaries. So that's why I think what we do is so important. Luke, I really, really appreciate it. Any final thoughts?
No, I think the next 3 months are going to be pretty interesting. So it's starting to feel like every Sunday night, it's like Sunday afternoons, it's Sunday mornings. I'm like, okay, what's going on? Which on one hand is great. On another hand, it's reminiscent of periods when things were pretty volatile. So look, I think I came to the year thinking we were going to need to be low over our skis for the first 2 to 3 months of the year. We're 3 months in. And I think we probably need to stay low over our skis for the next 2 to 3 months and, wait and see how things develop over that period of time.
Do you think the bottom's
in terms of what? In stocks, economy, Bitcoin?
Bitcoin.
Probably not, but I'd be a better buyer here. Like, a gun to my head, I'd be a better buyer, but I wouldn't be real aggressive. But look, I love it long term. It's still one of a very important position for me. And I don't worry about it. I worry about the NASDAQ, to be honest, and just being a realist of look, it's going to trade with the NASDAQ till it doesn't. Yeah. And the NASDAQ, I'm really worried about. Do I think the bottom's in for the NASDAQ? No, emphatically no. American investors that I'm trying to, one of the, I think many great things about X and is you quickly get a sense of sort of where consensus is, where American investors are absolutely 150% not factoring in the capital outflow dynamic. This is the first time in any of our careers we are actively telling the world's factory, the world's biggest creditor, get out, take your money and go home. And that is not in the price of NASDAQ. Because if it was, the NASDAQ would be a lot lower than it is today, in my opinion.
It's so true. Thank you so much for all of your insights. You have helped me understand the macro picture more than probably anyone. And I know a lot of my viewers and listeners feel the same. Our last interview about Bitcoin as the new oil went totally viral. I think people will get so much value out of this one too. I'll link your work below, FFTT. Luke Gromen, thank you so much as always.
Thanks for having me back on. It was great speaking with you again.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. Sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.